Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Well, welcome back. Thanks for tuning in to our Real Estate 360 program, your number one source for all of our real estate information needs, education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom Wilson, your host for the Wednesday edition of Real Estate 360 that comes to you daily, Monday through Friday at 3 p.m., along with my co-hosts, Joe Kuchera and Lori Graymont. Tune into those shows as well for other guests and other topics related to real estate education. If you can't make the live shows, you can catch your podcast on RE360radio.com, and you can catch my programs on TomWilsonProperties.com or on iTunes. You can also go to TomWilsonProperties.com and sign up for a newsletter, which is a weekly economic snapshot, a quick 1-minute read of what's going on in the world of economics as it relates to real estate. We also have a report on how to select the best metro and product for investing in. We welcome, of course, your questions and to be answered directly or on the air. And we also provide a free hour of consulting for anyone that's interested in getting some assistance in looking at their portfolio and what direction they should go relative to real estate buying, selling, or investing. We have a great program for you today with our return of our frequent guest, Richard Crouch, who's a top agent with Alon Pinnell Realtors and also a financial advisor, investment advisor with Transamerica Financial Advisors. And Richard is another high-tech entrepreneur turned real estate agent and market analyst extraordinaire. And it's always good to have him back on the program here because he does a great job using his skills from the high-tech management and entrepreneurial world to analyze and look at all the data that's coming in from all over about economics and real estate and help us figure out what's going on with the marketplace. And today we're going to talk about slight shifts in market and in the Bay Area and nation and how that might affect you and what you should do about it. And Richard, welcome back to the program.
Tom, thank you, and thank you for those wonderful things you had to say about me today. A nice way to start off any radio show.
Thank you. Well, true indeed. I know you've, as well as being a engineer and high-tech entrepreneur, I know part of your early career and your family history had to do with the whole broadcasting and radio arena. And I just got back recently from Nashville where I saw one of those very first clear channel radio stations that's still going and saw some of that equipment that they used. And that was built
by my father. So,
yeah. So I thought about you.
I grew up in Nashville.
and I think I sent you some pictures from back there too. It was fun to see and reminisce about what that must have been like.
Yes, indeed.
And so let's start off for our listeners here and talk about as this program is being recorded. We're here in the beginning of the end of the third quarter, beginning fourth quarter of 2013. Still in a hot market, but things are changing a little bit. So let's talk about the shift and what that means to everyone.
Okay. Well, what I thought I would do is give you the perspective from an agent first, and then give you some perspective from experts and what they have to say about that. Okay?
Okay.
So for any real estate agent, certainly here in the Bay Area in the past 8 or 9 months, it's been a fast and furious, a very hot market, lots of buyers, not as many properties, multiple offers, frenzy, any other adjective you might want to use. What clearly has happened starting in August, essentially, the numbers probably show that it started in July, has been a slowdown. Now, when I say slowdown, I mean in terms of volume of activity and numbers of offers on properties. It doesn't mean anything at all about prices going down. They're still going up. The momentum of that is very difficult for anything to change in that short of a time. So from an individual agent's point of view, lots of buyers, many properties offers made on, hopefully a fair number of sales in a market which is not perfect because you want more inventory, let's face it. That way buyers can go into the market and have a productive process to buy a home.
Any product or service, the market needs velocity.
Right. So from an agent's perspective, what's happened is the summer slowdown, which is fairly typical, had definitely hit. I think you'll see August numbers even weaker in terms of sales volume than July. You had the 4th of July. 4th of July. Yeah, we did in July. But in August, we had back to school as early here in the Bay Area as the 19th of August. And with Labor Day falling 2 weeks after that, I think pretty much people took a siesta for the most part, from listing homes as well as buying homes in terms of buyers showing up. Now, from the expert's point of view, just a few quotes here from Rick Judson, the chairman of the NAHB, National Association of Home Buyers, responding to the report that over 80% of housing markets are improving. While there is still plenty of room for growth, there is an excellent indication of how the housing recovery has begun to take hold across more geographical areas. And this is nationwide, of course.
And as we often point out, is that people say, how's the market? And the market is thousands of submarkets. And it's amazing how different they can be in different parts of the country or even different price groups in the same neighborhood.
Absolutely. And Tim Sloan of Wells Fargo, the chief financial officer, said, when you look at any of the statistics in the demographics in terms of household creation, as well as household affordability, they're still very attractive and should drive a continued recovery in the housing business. Dr. Alex Villacorta, VP of Research and Analytics at Clear Capital, he adds his 2 cents worth from the financing side. With the continued strengthening of home prices in August, the need for perspective on market activity is more important. Considering the low price tier segment of the housing market led the recovery, the cooling in this segment will likely transfer through to the broader housing market. That's not to say the recovery is slated to stall. Rather, growth patterns are likely just to return to more historical rates of growth between 4 and 5%, rather than align with a bubble-like growth. At the end of the day, that's great news.
Yep, sure is.
2 more comments. Bradley Hunter, chief economist at Metro Study, we've gone from a situation where 5 years ago everyone was saying there are too many lots. Today, builders are literally crying on our shoulders saying there are not enough lots. We can't find any. Jay Brinkman.
Lots being to build on.
Yeah, to build on.
For new construction.
And here in the Bay Area, that problem is compounded because we only have a finite amount of space certainly in the Santa Clara Valley, but really in all the Bay Area neighborhoods. Finding land that's just waiting to be bought and built upon, that's a tough one, a very tough one. Finally, Jay Brinkman, Mortgage Bankers Association chief economist, the recovery we've seen has been related to the fact that the economy is creating jobs at a steady rate, and those jobs do translate into paychecks. Some of those paychecks go for rentals, others go towards mortgages.
Mm-hmm.
So in summary, it's a slowdown, but it's a normal slowdown, one that is healthy, and prices continue to rise, and that trend shouldn't change as long as the economy stays on track where it is now.
And our Silicon Valley number one paper media source for news, and in Mercury News, and also in the Wall Street Journal here just day before yesterday, they had an article that was home sales frenzy eases, And of course, the headline they always like to make dramatic, but as some could interpret that as almost cliffing off. But you start reading through here, and it says, for example, that agents had multiple bids on 61% of its homes in August, down from 76% in March. Well, 61% multiple bids is still a pretty high number, and that's talking about nationwide, not just locally. So indeed, the velocity has cut down a little, but it's still a pretty hot market.
Well, I think the thing
in most areas.
Yeah, and I mean, clearly what you just, the 61, 76%, it doesn't change anything in terms of the dynamics. There's still not enough inventory. But housing inventory is making a comeback. So in Santa Clara County, for example, back in February, we had 750 homes listed. Normal is 2,500. Just about a month ago, that number had risen to 1,700. And I think by the time we get to the end of September, it'll be close to 2,000. So inventory is making a comeback nationwide.
And I might add, in buyer markets, having been here for 43 years and watching those numbers, a weak market is like 5,000 inventory. So 1,700 is still below the kind of the median volume, but significantly up from the 700 it was.
Yeah, and then finally, nationally, at 1.98 million homes listed for sale in August. That was a release from Realtor.com. That was up by more than 24% from the low point in February, and up 1% from July. So inventories have increased for 6 straight months, and that's good news for buyers and sellers.
Yep, indeed. Any other note there for the minute we have left in this segment to talk about what's going on in the nation and what the experts say? Yeah,
let's take Fannie Mae's housing forecast for August, the last 12 months and the next 12 months. Home sales in thousands, risen from 5,116 to 5,794. Home prices in thousands, risen from 184 to 213. Now that's 184,000 up to 213,000. Okay, and then the 30-year mortgage rate during that period risen from 3.5. This was the third quarter of 2012 to 4.8 in the second quarter of 2014. So there you have it.
Okay, we have with us in studio today Richard Crouch, a regular guest with us, who is an agent with the Lon Pennell Realtors and an investment advisor with Transamerica Financial Advisors, and a great guy that helps us to analyze what's happening with the very dynamic marketplace that we're in. This is Tom Wilson on AM 1220 KDOW, Radio Real Estate 360, and the Wall Street Business Network.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. We have special guest Richard Crouch back with us this week, talking about what's going on in this dynamic real estate market. So Richard is with Lon Pennell Realtors, top agent there, and he's a high-tech entrepreneur who has made the switch to real estate like many of us have done. and he applies his analytical skills to help us analyze the marketplace and what's going on. So we've talked about how market is slowed, but it's still pretty hot. Inventory has gone from in Santa Clara County as a reference point, Silicon Valley, from 700 to 1,700. Normal market's 2,500. Buyer's market is 5,000, just to give you a reference point. And let's give the listeners, at least for the Bay Area, and it can, which is many respects a unique area in the country, but a very important one and often a bellwether one for others to watch. Tell us what's going on here in the Bay Area.
Tom, I will. The first thing I want to say is I haven't said this before, but I just want to compliment you on the music on your show. and I have to admit, with will.i.am singing that song, I really want to be singing into the mic. Okay. But I know that's not the correct venue here today.
Keeps me active here in my seat.
Yeah, so maybe we can try that part of it another time.
All right.
Okay, yeah, let's talk about Bay Area prices and volume. What's going on? We've got every county here, and so listen for your county or those counties that you feel are relevant to your situation. Market shows the sign of leveling off. We've already talked about that. So let's just go. What we're going to talk about here is the number of sales and the median price. Now, once again, it's always a good idea to remind people. I have to remind myself what median price is and what it implies. It's the midpoint in terms of volume of sales in the market. So it's the number above which half of the sales are a certain range of numbers and below another range of numbers. So it's a barometer, but it is by no means an indication of the sales value or average price changes in an individual property. So it's really important to remember that.
And the biggest potential anomaly or error in people's reaction to it is you got to know that it's reflecting whatever's selling now. So if a higher price segment is selling now relative to last year or last month, it may look like prices are going up when really just the median has gone up. But it's become such a baseline and standard. It's certainly a point that's relevant to know about.
Absolutely.
And you got to be careful with headlines that say housing down by 7%. And many people say, oh my gosh, the prices are dropping. And what they mean is the volume's down by 7, which is not much of a change.
No, not at all. In fact, it's a precursor to price increases. So let's just take a look here. Numbers sold, again, and median price. In Alameda County, August 2013, 1,825 units, which was down 1.6% from a year ago. The median price was $512,000, up 34.7% from a year ago.
Amazing.
Yeah. Contra Costa, 1,645 units sold in August, minus 0.2%, so basically flat in terms of volume, okay? The median price was $420, rose to $420,250, which was a 40.9% increase. Now, obviously, you get these big number of rebounds in the counties that took the biggest hit in the downturn. Marin County, obviously a small number of transactions, 355, and they were actually down 4.1% from a year ago. And the median price of $760,000 up just 19.9%. So the more affluent areas are impacted less overall. Napa County, 137 units, down 14.4%. $460,000 is the median price, up 31.4%. There's more to come on our next segment.
Okay, so we have Richard Crouch with us today, agent and market analyst and investment advisor, who is in studio today helping us figure out what's going on with this dynamic and changing marketplace. So when we come back right after the break, we will give you some more stats about what's going on in the Bay Area. So this is Tom Wilson on Real Estate 360, AM 1220 KDOW, the Wall Street Business Network. We'll be right back.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. We have Richard Crouch with us in the studio today talking about the market dynamics that are going on. Richard, continue, if you will, with what's happening here in the Bay Area.
You bet. Well, the last one that we talked about was Napa, 137 units, minus 14.4% on the volume of sales, and the median price up 31.4% to 460. Next comes San Francisco, 646 units sold in August, down in volume 12.6%. The median price of $825,000 was up 17.9%, and that is the largest median price in the Bay Area.
Highest median price, not the highest gain, but highest median price. Yep,
that's correct. Mm-hmm. And then San Mateo County, 719 units sold, just almost flat, minus 0.8%. And the median price of $722,250, rising 21.9%, the growth of that number. Santa Clara County, Silicon Valley, the highest volume of any of the counties in the Bay Area, 1,989 units, down 5.1% from 1 year ago.
In volume.
The median price, $647,478, however, up 19.3. So the higher volumes, they've lost less and they're gaining less. So that means the whole market is really coming together pretty nicely. And so after months of increases, single-family home sales dropped 3.2% from a year ago. And we're down 8.8% from July.
Okay.
Now, we've talked about that. We talked about inventory making a comeback. We talked about the fact that inventory is still too low. And what we hope will happen is more inventory will come on and more sellers will sell, because that's what's needed. Just to kick off, 5 reasons to sell your house now. And we will split this topic into 2 segments. Number 1, demand is high. The most recent existing home sales report by the National Association of Realtors showed a 17.2% increase in sales over July 2012. Sales have remained above year-ago levels now for 25 months. There are buyers out there right now, and they're serious about purchasing. Supply is beginning to increase. We talked about that. Last month, total housing inventory rose 5.6% to 2.28 million homes. This is, again, in the United States. That represents a 5.1 month supply at the current sales price, compared with 4.3 months in January. Many expected inventory to continue to rise as 3.2 million homeowners escaped the shackles of negative equity in the last 12 months, and an additional 1.9 million are expected to enter positive equity in the next 12 months. Selling now while demand is high and before supply increases may garner you the best price. All of that, I think, good news, certainly for the people that have been in trouble with their homes.
Yep, indeed. Okay, well, we will be back here in just one moment to continue with some more stats on what's going on in the Bay Area and talk about where we think things are headed and what you should do. This is Tom Wilson with Real Estate 360. We have Richard Crouch in the studio today, and this is AM 1220 KDOW, the Wall Street Business Network, and we'll be back with you here in just a moment.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
I'm in the studio today, Richard Crouch, a regular guest here on Real Estate 360. Talking about how the dynamics are shifting a little bit and what you should do about it. Richard's with the Transamerica Financial Advisors, and he's a top agent with Alon Pinnell Realtors and a entrepreneur in high-tech turn real estate market. Richard, we're talking about, before the last break, we were talking about the reasons to go ahead and get your home sold now. Let's continue that.
Okay, and just to refresh, in case you missed the last segment, demand is high. That's one reason. Supply is beginning to increase. Okay, so the next three reasons for selling now. First of all, new construction is coming back. Over the last several years, most homeowners selling their home did not have to compete with a new construction project around the block. As the market is recovering, more and more builders are jumping back in. These shiny new homes will again become competition as they are an attractive alternative for many purchasers. Now, I will also add that here in the Bay Area, that very fact, with land as hard to find as it is, and most new homes being built in high-density projects, this is spurring a lot of people to update single-family residences to be able to compete as well, because the quality for the inside is, for the most part, be the same depending upon what buyers you're trying to attract. Okay.
And we have another driver here in California, and that is the fact that if you stay in your home, the tax base stays the same. So there's an incentive to remodel rather than buy. So that's always a competing philosophy.
Absolutely. Okay, then the next reason, of course, most people probably already know this, but it never hurts to reemphasize, interest rates are rising. And according to Freddie Mac Primary Mortgage Market Survey, interest rates for 30-year mortgage have shot up to 4.57%, which represents a jump of more than a full point since the beginning of the year. The Mortgage Bankers Association, Fannie Mae, Freddie Mac, and the National Association of Realtors are in unison projecting that rates will continue to climb. So as a seller, with rates going up, you want to sell sooner, not later, because as rates go up, the homes become more expensive, number of buyers drops off somewhat.
And the ability of buyers to buy the same price house drops some.
That's right. That's right. The last reason, which is probably the most important reason, and one we tend to forget about with all these statistics and all these numbers we talk about, hey, For many people, it's time to move on with your life. Forget about the median price. Forget about the volume. Look at the reason you're thinking about selling and decide whether it is worth waiting. Is the possibility of a few extra dollars more important than being with family? More important than your health? More important than having the freedom to go on with your life the way you think you should? You know already the answers to these questions we've just asked. You have the power to take back control of your situation by putting the house on the market today. The time may have come for you and your family to move on and start living the life you desire. That is what is truly important when all is said and done.
Yep. And what happens is uncertainty keeps people sitting on the fence, and if as interest rates go up and prices go up, then it becomes more frustrating. So there's no reason to wait. So let's now look at the other side. What are reasons for a buyer to buy?
Well, I mean, clearly reasons are that inventory is much more available now and less hectic, less frenzy.
A little less competition.
Yeah, the amount of stress over the last 6 months for buyers has just been major. But now it's more reasonable. You read multiple accounts in the papers that somebody went out, they looked at several houses, and they ended up finding the one they wanted, and they only had one other buyer to compete with. People can usually deal with that. So that's the biggest single reason. The other reason, of course, is that prices continue to go up. That's a fact. And that, barring another recession, that doesn't change. And usually recessions are shorter periods of time than bull markets. So if you're looking at the long haul, which if you're buying a home, that's what you should be looking at, not the short term, prices are going to go up. So that means buy now, lock in a price, what's best for you and your family.
And affordability is going to continue to come down. As interest rates go up, you'll be able to afford lower and lower loans. So waiting is not going to work in your favor.
Absolutely. So pricing a house incorrectly can be an issue as well. And I think what you have to realize is that when the market's in a frenzy with multiple offers, the market price is decided by the market. We price homes at or under their value in order to find out what they're really worth. And the market will tell us that. The number of buyers who submit bids, the auction that takes place, that determines the market price. In a more normal time, where you don't have that frenzy, pricing is a lot trickier. You absolutely have to have a real estate agent that knows and understands the market and dynamics in these kind of circumstances. So you have to make sure you don't overprice, because if you overprice, then you potentially got a problem where the property will stay on the market longer. Buyers will say, what's wrong with that property? Why isn't it selling? And you have to avoid that at all costs. You still want to price at market.
Because it's hard to recover from that.
That's exactly right. It's very hard to recover from that.
Mm-hmm. So interest rates going up and prices going up and less competition with other buyers is a good reason for buyers to go ahead and make that move if that strategically is what they want to do.
Yeah, and just to finish, 14,767 houses sold yesterday. Each day, 14,767 did yours. If it didn't, you're probably overpriced.
Okay. Thank you, Richard. We'll be back for the wrap-up in just a moment. This is Tom Wilson with Real Estate 360, AM 1220 KDOW, the Wall Street Business Network. We have Richard Crouch with us in the studio today, talking about the change in dynamics in the real estate marketplace. We'll be back in just a moment.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. We have in studio with us today Richard Crouch, Lon Pinnell Realtor and investment advisor with Transamerica Financial Advisors, Silicon Valley entrepreneur turned real estate professional, helping us to analyze what's going on in this dynamic marketplace in general in the nation, and with a focus on the San Francisco Bay Area and Silicon Valley, which is where we are broadcasting from, and has certainly been always a dynamic market. So we've talked today about how the market has slowed some, and be careful when you see the headlines. It's like came out in Wall Street Journal 2 days ago. It said home sales frenzy eases, but the emphasis is on eases because it means it's down a little, but it's still a pretty hot market, but it makes it a little bit more tolerable. Our volume is up by double in many areas of the inventory that's out there and available, which makes that a little bit easier for buyers. Sellers and buyers should proceed in the marketplace if it fits in with their personal and financial strategic plan, because rates and prices are still likely to climb. And real estate continues to be, I think, an excellent investment, an asset, whether it's a investment for a rental property or for your own, because it's a great hedge against inflation. Richard, thank you for being with us today. Tell people how they can get hold of you if they want to have some more information on the marketplace and or whether or not they should buy or sell their home, either for investment or their own home.
Yes, thank you, Tom, and thank you again for having me. I really appreciate having the opportunity to be on the program and learn some things myself. To reach me, it's easy. The website is Richard and A-N-D, Candace. That's K-A-N-D-I-S, KANDIS.com, richardandcandace.com. And you'll find a lot of great information there about Silicon Valley and real estate. You'll contact numbers, email, everything, phone numbers. Just give us a call, send us an email. We'll be glad to help in any way we can. Great.
And Richard's going to be back with us next week, continuing to talk about the marketplace and a little bit more on fundamentals and the market and how to address them and how to deal with that. In the meantime, go to TomWilsonProperties.com and sign up for a economic newsletter that tells you how real estate is affected by what's going on in the world. Nice 1-minute read. Also, you can ask for a report on how to choose the best metro and product for investing in if you'd like to do some investing in that area into some assets that are likely to be a good hedge against inflation. And also, we're glad to give you an hour of consulting or whatever suits you if you call in or go to TomWilsonProperties.com. So thanks for being with us on AM 1220 KDOW, Real Estate 360, the Wall Street Business Network. We'll be back with you next week with having Richard back with us, and we will continue to talk about this dynamic marketplace and what you should do about it. This is a very exciting times, and don't want you to miss out on what's going on. We want to give you all the information that we can to help you out. And remember, the only thing that matters is what you do next. See you next week.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's